Large corporations usually have extraordinary revenues, in the millions and sometimes billions. Revenues so extraordinary that they are almost always accompanied by large profits, but also by millions and sometimes billions in tax payments. Many entrepreneurs see taxes as wasted money and view tax burdens as an amount that could be part of their profits. In an attempt to avoid paying these taxes, large companies typically use so-called tax havens. In this way, they pass on taxes, thereby increasing their net profit, which can be used to expand their operations, distribute more money to their shareholders, or maintain a larger capital in their coffers. This practice may seem illegal at first glance, but large corporations have a huge legal team, a veritable army of lawyers who find loopholes in laws that ensure the legality of the entire process in most countries. But how do companies really carry out these operations, and what are the consequences of this practice? In today's video, you will learn more about the controversy surrounding tax havens and how large corporations evade taxes. But first, please like this video and leave a comment on what you think of companies that avoid taxes at all costs. I would like to know your opinion. Also, subscribe to the channel and activate notifications so you don't miss any updates here on Visionary Businesses. What is a tax haven? First of all, it is important to understand what a tax haven really is. Basically, a tax haven can be a country or territory that offers tax and regulatory advantages to companies and individuals, such as exemption from taxes on profits, high bank secrecy, flexibility in the regulation of financial activities, and low or non-existent taxation. Tax havens can be classified according to their legal and economic structure. Some are independent countries, while others are autonomous territories that belong to larger countries, such as the Cayman Islands, which is a British territory. Others are city-states, such as Singapore. Usually, tax havens are locations with little or no regulation on financial activities and taxation. Large corporations use these tax havens to avoid or at least reduce the tax burden they should pay in their countries of origin, in a process known as tax evasion. This process occurs through strategies such as transferring profits to subsidiaries in tax havens through the use of artificial transfer prices and the manipulation of accounting and financial flows. The issue is extremely relevant currently, as large companies have used these tax havens and tax evasion practices to avoid paying taxes, harming revenue collection in the countries where they operate. These practices are still highly controversial and have been the subject of discussions by governments and international organizations seeking ways to prevent or at least minimize tax evasion. Although not illegal, they have an extremely negative impact as they directly affect the global economy, social inequality, and democracy. Because the governments of the countries where the companies operate lose significant resources in tax revenue, which can harm public services and economic development. But what do you think of the practice of tax evasion? Do you believe that companies should be punished for directly harming the countries where they operate? Or do you believe that since it is not illegal, companies should take advantage of it to increase their profits? Leave your opinion in the comments. What are tax havens? There are some lists of tax havens, compiled by different organizations and countries, that aim to increase surveillance and analyze the finances of companies that have contact with certain tax havens. The main list is that of the Organization for Economic Cooperation and Development, OECD, which maintains a list of countries whose jurisdictions are considered non-cooperative in tax matters. Currently, the list includes Belize, Cook Islands, Dominica, Fiji, Mongolia, Nauru, Niue, Palau, Panama, Samoa, Seychelles, St. Vincent and the Grenadines, and Vanuatu. The European Union also maintains a list of jurisdictions considered non-cooperative for tax purposes. Currently, the list includes Anguilla, Bahamas, Belize, Cook Islands, Dominica, Fiji, Grenada, Guyana, Marshall Islands, Nauru, Niue, Palau, Panama, Samoa, St. Kitts and Nevis, St. Lucia, American Samoa, Seychelles, Solomon Islands, Turks and Caicos Islands, Vanuatu, and the U.S. Virgin Islands. The United States also maintains a list of countries that do not cooperate with tax information exchange, called the Priority Watch List. Currently, the list includes Bosnia and Herzegovina, Cayman Islands, Fiji, Guatemala, Lebanon, Maldives, Marshall Islands, Nauru, Oman, Pakistan, Serbia, Eswatini, Trinidad and Tobago, Tunisia, Vanuatu, and Yemen. These are just some of the most famous examples, and it is worth noting that there are tax havens that share information with some countries but not others, which makes it difficult to create a single list that can be used in any situation. How does tax evasion work? There are several methods that companies use to avoid paying taxes, with one of the most common being the transfer of profits to subsidiaries in tax havens. This method involves creating companies in tax havens that receive profits generated in other parts of the world, such as in countries where taxation is high. These profits can then be reinvested in the company's operations in other countries or kept in bank accounts in the tax havens themselves, without the need for taxes such as income tax. Another common method is the use of artificial transfer pricing. In this case, the company manipulates the prices of goods and services between its subsidiaries in different countries in order to transfer profits to countries where taxation is lower. For example, a subsidiary of a company in a country with high taxation may buy goods or services from another subsidiary in a tax haven at artificially high prices, thus transferring profits to that location. A common practice is the creation of intellectual property in the subsidiary company in tax havens, so the company pays royalties to its own company in some tax haven and avoids paying taxes in the country of origin. The technique of intellectual property is the most advantageous for large corporations that want to practice tax evasion because there is no need for the purchase of a physical product that would have a cost associated with its manufacturing. Large corporations can also manipulate their accounting and financial flows to avoid paying taxes. This can include transferring debts from companies in countries with high taxation to subsidiaries in tax havens, creating shell companies in tax havens, and using complex financial operations to reduce the tax burden. These methods are extremely controversial and have been the subject of discussions by governments and international organizations seeking to curb tax evasion and ensure fair and balanced taxation for companies and individuals. Risks and benefits. Tax evasion is not a simple or cheap task for large corporations, but the practice of transferring resources to tax havens can still be advantageous depending on the risks involved and the method used. As benefits, tax evasion practices through tax havens can bring important advantages to companies, such as reducing the tax burden, which in turn generates an increase in profitability. This can allow them to invest more in their operations and expand their business, but most often means more money in the pockets of owners and shareholders. These practices can also bring several risks to companies. Tax evasion through tax havens can harm the reputation of a corporation and cause damage to its image with customers, suppliers, and business partners. They may even be illegal in some countries, and companies may be subject to fines, sanctions, and legal action if discovered. Another risk is the possibility of changes in tax legislation that may make tax evasion practices more difficult or prohibited. Governments have adopted measures to combat tax evasion through tax havens, such as increasing transparency in international financial operations and creating international agreements for the exchange of tax information. All of these efforts can make tax evasion practices more risky, difficult, and expensive to carry out, thereby avoiding them from being routinely practiced. Consequences for the economy. Tax evasion practices have significant effects on the global economy. One of the most evident consequences is the reduction of tax revenue for affected countries, which can harm their ability to invest in public services and infrastructure, directly affecting the quality of life for their citizens. Tax evasion can also negatively impact competition between companies, as companies that evade taxes have a competitive advantage over those that pay their taxes correctly. This can lead to market distortion, with companies engaging in tax evasion being able to offer lower prices and, in turn, driving out companies that pay their taxes correctly and contribute directly to the country where they are based. Another problem with tax evasion practices is the loss of revenue for countries where companies operate, as these companies can direct their profits to subsidiaries in tax havens instead of reinvesting these resources in the countries where they are based, affecting the economic development of these countries, with a reduction in investments in infrastructure, technology, and innovation. Tax evasion can also affect the trust of citizens in governments and institutions, as the perception that companies are not paying their fair share of taxes can generate a sense of injustice and inequality, affecting the economic and political stability of countries. A consequence that may also arise is negatively affecting international cooperation, as the lack of transparency in international financial operations can generate mistrust among countries and make it difficult to adopt joint policies and measures to combat tax evasion. Combating tax evasion. Governments and international organizations are systematically trying to prevent tax evasion and have been taking measures to combat tax evasion and increase transparency in international financial operations. Among the main measures are the creation of lists of tax havens, as mentioned earlier, which have the main objective of identifying those that do not comply with international standards of transparency and cooperation in tax matters. Inclusion on this list can result in sanctions and restrictive measures for countries identified as tax havens. Another important measure is cooperation between countries, where governments are working together to combat tax evasion through the exchange of tax information and international cooperation agreements. The main actions of this cooperation include the signing of international treaties, the creation of shared databases, and joint investigations. Increasing transparency between governments is another practice to prevent tax evasion. Several countries have adopted measures to increase transparency in international financial operations, such as requiring the declaration of bank accounts and investments in foreign countries, the obligation to disclose information about company operations in different jurisdictions, and the creation of public registers of ultimate beneficiaries of companies. Regulation of companies is still an important part of the methods used to prevent tax evasion, where some countries have adopted measures to regulate the activities of companies in relation to tax evasion. Governments are also demanding that companies disclose information about their financial and tax operations in their annual reports and creating rules for the taxation of profits of multinational companies, as well as prohibiting abusive tax planning practices. Despite these methods helping to reduce the rate of companies using tax havens to avoid paying taxes correctly, increasing transparency in international financial operations, there are still challenges to be faced, such as the resistance of some countries to adopt international cooperation measures and the lack of clear global standards in tax matters. The use of tax havens by large corporations as a way to evade taxes is not a recent practice, but governments are increasingly creating ways to prevent it from being carried out freely and with impunity. But what is your opinion? Do you think countries should take stricter measures to prevent the use of tax havens to avoid paying taxes? Can you think of any ways to prevent large corporations from avoiding paying their taxes? Leave your idea in the comments. Also, leave a like if you liked this video. Subscribe to the channel if you are not yet subscribed, and turn on the notification bell so you don't miss any new videos here on Visionary Businesses. One thing is certain, with the economy becoming increasingly digitalized, companies are finding it more difficult every day to avoid taxes and freely send their money to tax havens in order to avoid paying taxes. Certainly in the future, artificial intelligence could be an excellent tool for identifying and helping to prevent tax evasion. This is one of the possible applications of this technology that continues to surprise us every day, and perhaps an extremely beneficial one. But artificial intelligence can have even more impressive implications, and it could even be responsible for the end of humanity as we know it. Don't believe it? Then I suggest you watch the video that is now appearing on your screen to learn more about the subject. Watch it now.